India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Last trading day of the week. It's a Friday morning. We are coming to you live as always from the CNBC-TV18 and this is Bazaar Morning Call. I can't say too much to track from overnight because overnight US markets were shut, but there is a lot lined up as we look ahead into a Friday session and of course into the weekend as well. I'm Prashant, with me my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, morning,
Good morning.
folks. I guess we three here in the studio have managed to bring out a little bit of cheerful color, though it's not been a very cheerful week for the market. It's been crunching and it's been tough. And I don't know, apart from the markets, are you ready to work 90 days a week, Nigel?
No.
I think that's gotten a fair amount of discussion online and offline as well, and we'll spend some time talking about it. But besides that, I think we have a market to deal with, and it's not been an easy market.
On certain weeks, though, I'll be close to 90.
That's different, but as a rule,
No.
Maybe there's a lot to think about. Maybe there's a much bigger, wider social debate that's needed because, yes, I mean, we're a very different economy with very different realities in terms of commutes, in terms of life, in terms of work-life balance. So I think this is a wide open public debate. It's not going to settle anytime soon.
All right, well, let's just kick it off with what you need to know as far as the trading action is concerned, right? I mean, picking up, of course, from last night. And last night, US was absent. You had US equity markets which were shut, bond markets shut early, so there isn't that indicative handoff in terms of what the start here could be. So in a way, a bit of a vacuum this morning. Dollar index, I mean, currency and rates market, of course, I mean, you had some indication, dollar about near the 109.2 odd levels. So there was a tad higher, touch higher. Yields, I mean, the 10-year was absolutely flat. Actually, intraday, it went up 5 basis points. But again, I mean, the market shut early, so I'm not sure how much of that you can take. 2-year was down, so for what it's worth. Lots of Fed speakers, multitude of Fed speakers, at least 4 of them, and all of them kind of generally pointing in the direction that maybe we need to go slow as far as interest rate cuts are concerned. Slower rate cuts, it's been the theme. When we started this year, I said, well, last 10 days, 15 days post the FOMC meeting, that's been the big macro driving point, and I think is getting more and more credence in that sense. Oil prices, I mean, Wednesday we were up 1%, yesterday we were down 1%, this morning as we come back we're up 1.5%, so not very much by way of change actually, point to point, $77 and change. The big data point later tonight is going to be the US monthly jobs number, which I think is the key risk. Now, the consensus is at about 165,000 jobs, but I've seen estimates as low as 120, 130. It'll be interesting if we do get a significantly changed number as compared to the consensus, what the market does, because the general view is hardened that, the economy is much better. Trump is going to make it better. It's America first, etc. So you don't need that many rate cuts. I mean, the rate cuts expectations for 2025 have been whittled down to 2 cuts. That's it, about 40, 45 basis points or so. So, will this be able to change some of that? It'll have to be a big difference compared to expectations. 4.2 is the unemployment rate consensus out there. Just to sort of tie in the levels here, we saw, of course, a weakness once again here in India, especially in the broader market. And 2 days now, the market low has been on the Nifty 23,500 or so. It's been sort of so far defended, and that's the reason why I think on the downside, this is the level to hold, 23,460 to 23,500, right? 23,460 is nothing but the 31st of December low. 23,500 is basically where the market's kind of bounced off from for the last 2 sessions. Breaking this will confirm further downside slightly. It's been generally, I mean, the mood's been sideways. Price action has been sideways to down as well. Now, immediate resistance for the Nifty, 23,640. That is nothing but the hourly average, 40-hourly exponential moving average on the way higher. Again, just about 100 points away. The Bank Nifty has, again, broken all key support levels. By the way, it's also, and we'll have to show it chartically, but it's also broken a head and shoulders pattern, which doesn't bode too well. Downside target here comes in at about 48,950. We're at about 49,500. So it's about, 1.5%, 2% away. The immediate resistance for the Nifty Bank stands at about 50,127. That is the 40-hourly exponential average, as we put out for the Nifty as well. So these are immediate levels which the market needs to come up above for some semblance of optimism to really creep back in. Remember, TCS last night reported numbers, and we'll talk more about that in a bit from now. But I have to say, and you'll hear from the management, the commentary, not the numbers themselves for the third quarter, the commentary from them perhaps seeming a little better. GIFT Nifty will come up on your screen, and that should give you a sense of how we're likely to start this morning. And that's about, another 60-point cut? I mean, these are the knocks, they keep on coming, and they have through the most part of the last fortnight or so. 23,584 is the indication. Surabhi.
Absolutely. 2% down on the Nifty so far this week, almost 4% down on the mid-cap index so far this week. It has not been easy by any stretch. Challenging start to 2025 for sure. Now, the setup this morning is no better because most of the Asian markets are trending on the downside, barring Hong Kong. Hong Kong is the only market, and this, absolutely flat indications in Taiwan. Barring these two, most of the other larger markets like Japan are down, Singapore, Australia, most of these markets are trading down. The spotlight continues to be on the non-farm payrolls report, which comes out later when the U.S. market action resumes. And just for reference, the number in November was about 155,000. The number in November, beg your pardon, was 227,000. And the expectation this time is ranging between 155 to about 160, 165 in terms of the job additions. So slowing down in the number of jobs added from November. That's largely the construct. The other important development is China, and it relates to the China bond market. We must keep a track on this as well. The PBOC this morning has said that it will stop buying Chinese government bonds temporarily. And why is that? Because bond yields in China have been tumbling. This is because of the low inflation to deflationary trends that are seeping in. Remember, we spoke about the producer price index, which continues to be in deflationary territory in China, and consumer prices are simply not rising. And bond yields have been tumbling. The PBOC feels that perhaps there's a bit of a bubble building up. So it has said that till the demand-supply situation in government bonds in China kind of balances out, it will stay away from the market. So that was an important development. Because of that, there was some green on the China markets, but even that is fizzling out. Let's come back home here. Another massive day of FPI selling. Look at the numbers. I mean, you've got over 7,000 crores of selling in from foreign investors. Once again, it's domestic investors to the rescue. But these numbers are large and you simply can't ignore them. Big numbers there. Domestic institutions buying almost 7,600 crores, while foreigners have sold off stocks almost worth 7,200 crores. Now, we've been testing the weekly low, which is around 23,500. Twice we've done that. Two successive days. Now, will that low be broken? We don't know. Last week's low then comes in question, which was 23,460. So levels are coming and going with no meaningful rebound. Can today be any different? The bulls will definitely hope for that. And the hope is coming in from TCS. And this is exactly what I was mentioning yesterday as well. The fact that Q3 is going to be weak is in the price. The stock is down 10% in the month of December to price that in. But will the stock show enough signs of life to start an uptrade just on the basis of the commentary? That's the most critical question. The numbers, dollar revenue is down 1.7%, which is more than what was anticipated. Constant currency revenue is flat, which is also a little lower than our poll. The margin picture is good. It's exactly in line with what Rima was telling us. There's a 40 basis points margin improvement. 24.5 is where the number is coming at. But more importantly, the commentary, and you'll hear more of it. What is the TCS management saying? The CEO is saying that there is improvement in discretionary demand. There is some improvement in sentiment that they're noticing. And that calendar year 25 should definitely be better than calendar year 24. So will there be an uptrade, at least a trade, based on this commentary? We'll find out. The other number that came out, Tata Elxsi, was weak. Revenue was down a little bit, and the margins slipped 150 basis points. So let's see what the reaction here is going to be. So, Nigel, I'm going to wonder whether IT can offer any sort of support to a market which has been really bleeding red for this week.
Well, I think so. There's going to be some support coming in from tech. And let me explain that in further detail. So the trend is weak. No two ways about it. On a day-to-day basis, any kind of bounce is getting sold into. And we have been seeing for the last few trading sessions, we're ending closer to the low point of the day. So the trend is weak. A short covering bounce is due. But how long before we get that? Could that be today? Could that be in the next week? We are due for a massive percent and a half move, at least in the next week or so. But we don't know whether it's today, but it's due, very much due. Now, just talking about tech, since that's going to be the top talking point, TCS's numbers, well, they were pretty okay. No, not running away to, for the bulls or for the bears. But the good point is, yesterday, the index itself ended at the low point of the day. So whatever weakness you had to see, particularly in stocks like TCS, it's gone into its numbers weak. And sometimes you don't mind that too much because they're talking about spends coming back, at least initial signs. And valuation-wise as well, TCS is cheaper than what it's been traditionally. So that's the good news. When the stock goes in weak, actually there is a case for it to recover from the low point of the day. So I'm expecting a recovery in tech in today's trading session. Moving to the FIs, what did they do in yesterday's trading session? Well, it's quite interesting because the FIs, both on the stock futures as well as on index futures, they've added short positions. That's on index futures, they added short positions, they unwound some longs. Even on stock futures, they added short positions and they unwound some longs. Doesn't take away from the fact that on stock futures, actually they're net long. While on the index itself, the FIs are net short out there. So we should pull that up for you on the screen. And the short positioning now is at its highest level we have seen in multiple months. And around these levels, you should be expecting some kind of a short covering bounce. But for that, you'll require some positive data points, which is not really coming about. So that's going to be important. On the stock futures, net long, though they've skimmed off a little bit. What about clients? Well, they are aggressively net long. Yesterday as well, they added long positions on index futures and overall on stock futures as well, they are net long. So they are clearly backing up this market. Moving to the options data then. Yesterday, had two stocks that were fairly active. 23,600 call, 23,500 put. And just take a look at the premiums. Plugging in those numbers, forget about the upside. For the time being, you want to know what about the downside. So the recent low becomes a first, point of support. That's at around 23,460, which is the recent low. That band of around 23,450 to around 23,500, that's going to be important. Otherwise, you're referring to the low that we saw in November. And otherwise, if this breaks, then you're directly looking to the lows that we saw on election day. So these are the important marks that you're looking at. The problem is the Nifty Bank, it's broken all supports and it's trading decisively below the 200 EMA. So in case it needs to bounce, you'll want it to get back up towards the 200 EMA, which for the time being is close to around 1,000 points away. Stocks in focus, since tech is going to be top of mind, Tata Elxsi came out with the weakest set of numbers. I'll keep an eye on KPIT Technologies because normally, you see some kind of reaction. If there's a recovery, then maybe there could be a recovery on this one as well. But a read-through for KPIT Technologies is one of the stocks that I'll be tracking.
All right, Nigel, thanks very much for that.